Hello guys, good afternoon. Another episode. Today we'll be talking about volume. I sent this to our community and I was expecting an answers to my questions, but none of you replied me. So I'll be giving out a video tutorial on volume. And I said something that the first thing, first of all, we want to know about when trading volume is the divergence. Divergence, just like the name implies, volume and price must agree together for price to go in a desired direction it wants to. If price wants to be bullish, the volume and price must agree. That means there will not be divergence. There should be no divergence with price and volume whenever price wants to go, whenever price wants to go bullish. Now, the first thing you need to understand in volume is this. In a rising market, volume will rise for price and volume to confirm. Listen, when volume rises for a bearish market or a bullish market, that is a confirmational signal that the market is bullish or the market is bearish. But whenever the market rises and volume decreases, then there is a divergence. Whenever the market falls and volume decreases, there's a divergence. In the sense that irrespective of the trend you are looking at, volume must be rising for it to be in line with what the trend. For volume to be in line with the trend, volume must rise. There will always be an increment in volume. There will always be an increase in volume. But whenever price is trending higher or lower and volume decreases, that is a what? It's a disagreement between volume and price. Now, there are different types of volume divergence based on my course and what I teach my students. We have the price and the price bar, a particular specific bar and volume divergence. Then the one I'm going to show you here is the general divergence we use in trading volume. Now, when you look at our charts, I have indicated every wave, every move by inputting our vertical and horizontal line. Now, if you look at this particular place, at level A, what happened? Volume increases. Sorry, price increases. Price made a higher low. That means a bullish market. But what happened to volume? Volume decreases. There's a decrement. There's a decrement in volume. To say that what? That as at that time isn't a bullish market. It is a retracement. That is a retracement in respect to another higher time frame. Why? If you look at the weekly time frame here, can you see? This is the weekly time frame here. The market is bearish. The market has been bearish for so long. And we have a what? We have price retrace very sharply, forming a V formation. And that was why we have the what? The decrement in volume to tell you that what? That the price is what? That is a retracement trade. Price will still go back to fall. But when we come back to B, at B, let's look at B. What happened at B? Volume increases with price. Now, if you have watched my market structure videos on how market reverse and retrace, you will be able to understand what happened at this region, at this particular region where I put my rectangle for price to do what? Continue a bullish trend here at wave B. Because when we go down to the weekly time frame, this is already a bearish market. But what happened? If you look at it, we break market structure here to tell you that what we are trying to go higher. And if you look at what happened here at B, price move higher. And what happened to volume? Volume also moves higher. There's an increment in volume. And that is why we will say this has started a trend. This is a trend. Agreement with price. This is a retracement. Retracement. Disagreement in price and volume. Can you see? Now, if you come here again, what did you see? The market tried to go down. The bearish market came and pushed price downward. And what happened to our volume? Again, volume is telling us that what? This is a bearish, is a retracement trade. This is a retracement trade. The smart money are not in this particular trade. That is what volume is telling us. This is a retracement. Don't be what? Deceived. And what happened to it? If you look at it, price drops. Can you see? Price drops and immediately price drops from this particular level at D, level D. We have an what? An increment in volume to tell us that what? This is now what? A trending market. The market has continued the what? The bullish trend. The increment at D, price has done what? Continue the what? The bullish trend. Now what happened again? If you come down to E and F, if you can see E and F, at letter E and F, I want us to take note of something. I'm going to divide this E and F into the wave A, B, C. Because I used to tell every student of mine, irregardless of what you are trading, Elliott wave, Wyckoff, anything you are trading, the market will always retrace in a wave of A, B, C. Now this is wave A. Wave A. If you allow me, this is wave B. Now this is the wave C that completed the what? The E trade. And I used to tell people that the wave C is the trend of the retracement. The wave A is the confirmation that price is going to retrace. The wave B is the wave B is the retracement, the pullback of wave A. Then the wave C is the main trend for what? For every retracement you are seeing. Now we are going to break this down into two. We might go down to the lower time frame to see clearly. So let's go down to lower time frame, but I can see from here because if you take my crosshair from this place down to this place at level A, we have a what? A decrement in wave. Can you see? So the volume drops from wave A down to wave B. We have a decrement in volume wave. And what happened from wave B up to this level? We have the what? The increment in volume. Can you see? There's an increment in volume to tell you that what? The wave C happens to be the general trend of every retracement, while the wave B happens to be what? The pullback. Then wave A is the confirmation that price is going to retrace. Now, I want us to go down to the lower time frame so we can see this clearly. Should we use 1 hour or 4 hours? Do we have the 1 hour? Okay, we don't have it in the 1 hour. Let's go down to the 4 hours. Oh, sure. All right, we have it in the 4 hours. Now let's see clearly here from the 4 hours. Can you see? This is it. Right from this zone, price drops from here, drops. Can you see? We have the drop. We have the drop here. Price started dropping from this zone to this high. We have the drop. That's the wave A and the wave B drop. The wave A. This is wave A. And this is the wave B. Now, can you see what happened to wave C? This is the old wave C, and we have it like this. Can you see? Let me put mine. This is wave C. From here down here. Can you see? We have price going higher, trending higher. I'm trying to pick the vertical line. All right, you can see this is higher than this is higher than this. You can see at every point it goes higher. And now you can see clearly that the wave C happens to be the what? The trend of a retracement. Why the wave A and the wave B? Wave A happens to be the what? The confirmation that price is going to retrace. The wave B is the pullback of the confirmation. Then the wave C happens to be the trend. Now let's continue. Let's go down to the daily time frame where we are looking at this. Good. Is it the 4 hour? Okay, I guess it's the daily. All right, now I'm very sure we are done with this area. Let me take out all this. All right, the wave A, the wave B, and the wave C. So if you agree with me, wave E generally is a what? Is a retracement. Is a retracement because if you go down to the weekly time frame, you see. Can you see from the weekly wave E? This is it. Price retrace. There's a drop in price from here. There's a drop in price. So you can see that is a retracement, a pure retracement. Now we go down to wave F. Now the wave F also is a retracement. This is where the smart money reaccumulate to continue the what? The bullish market. They reaccumulated here to continue the bullish market. Yeah, this is the retracement. The wave F. Now you can see wave F lasted to this zone. Yes, yeah. To the breakout. The breakout of market structure, yeah. Then what happened from here? We have a what? We have a clear bullish trend. A run of bullish trend, you can see. We have a clear bullish trend for the wave G. A clear bullish trend for the wave G. Now, if you look in between this place, here, if you can see we have series of downward movement in price. Even when price is going up, this alone is a volume divergence. It's a volume divergence, and the result of this place, the result of this market here, this particular wave up, the result of this wave up. Listen, hope you guys can see my color. Let me make it blue, bolder. All right, if you can see what happened to the market drops. And because of these drops, that was why we saw what? We saw an order H movement, which gave us what? A retracement. Why? Remember I told you whenever we see spot a volume divergence, it simply means that what? Market, the smart money are not with the trend. And we are looking at what? That is a retracement. That is probably a retracement. That is what the smart money is all about. The volume. That is probably a retracement. Whenever we see volume divergence, we have to understand that it's what? A retracement. A retracement of the market. You have to remember I told you the volume will always decrease at either bullish or a bearish trend for you to confirm that it is a divergence. Now we go down to high, letter high. Now even at high we have a retracement. Yes, at high. Because price went higher, but what happened? They are trying to tell us that what? The price is about to what? Retrace. This is a retracement. This is a retracement. Then at the end of the day, what happened? This was when the retracement got exhausted. This was when the smart money entered into the market. And that's why you could see that run up in what? In volume strength. You could see the run up in price. A lot of volume strength. Then this happens to be what? A consolidation at K. And that is what I want you to see. Now I'm going to let us take this H and see if we are going to see the wave A, B, C in what? Okay, so let's make this A, with A, with B, with C. Now we'll go down to the 4 hours. Okay, continue. Yeah, it's gonna take my time. That's why I'm making use of Control B to just highlight. Then I click on show. Then it takes me down to this area. Now this is it. This is it. Now let's see. Okay, price started the movement from here with A, and that was why we have what? We have the divergence. Can you see? Up to with B. With B lasted here. This is where with B stopped. Can you see? Up to with B. Then at the beginning of with C, there, this low. What happened to the market? Say, market went lower, and what happened to the trend? The trend was what? Bearish. To tell you that the wave C is the trend. It's the trend. That's always been the trend. It has not changed. It got to this level, this particular low here. And what happened to our trade? Our trade too went higher. It went higher. To this zone, it went higher. To tell you that it is the bearish trend. Then price drops with what? A retracement. Then it started picked up from this place. Can you see clearly? See, we have the retracement. The volume went down. So all through this area, we have a what? A divergence. The volume is saying, don't be a seller right now. Pause and check me again. I might reverse. Can you see? Has given us a tone that they might reverse, they might reverse the market, they might reverse the market. And that was why we have the reversal. We have the reversal coming in. Price reverse to continue the trend. And it happens at what? At the breakout here. Especially where the breakout came from. The breakout. And that was where we could have what? An increment in volume. Volume increases. Can you see? From here, we have an increment in volume up. So that is volume for you. Volume teaches you, it shows you how the smart money reacts with price. See, volume shows activities, and what activities is it showing? It's showing the price activities. It's trying to tell us the actual amount of people who are in a particular pair at that particular time. So volume is something that you need to incorporate on your system. And don't forget to this lesson, it's all about the divergence. Volume and price divergence. Is volume doing what divergence is talking about? Is volume doing what divergence is talking about? If yes, that is what you want to do. If volume is saying that there is divergence, watch out for it, analyze your trade very well. Then you trade after getting your confirmation signal. But if volume is in line with the trend, then you want to be a buyer or you want to be a seller, depending on the trend. And that is how it is. That is how it is. That is what you need to understand about volume. So do your own work. You can go back to your chart, back test this. You see this volume happens over and over and over again. It occurs over and over and over again. All you have to do is just learn it. Learn. So see you next time. Thank you. Don't forget to like our page and subscribe. And join our FOREX trading community on Facebook, on Telegram. If you have not joined, we are waiting for you. Thank you.